Today, we are going to talk about what might be the wildest story in the US stock market in 2025. A stock that was on the verge of being delisted, Opendoor. Its price surged from $0.90 on the 11th of July to $9 on the 11th of September, a tenfold increase in just 2 months. Retail investors swarmed Reddit, sparking a frenzy across the forums. Some called it the next GameStop, others claimed, real estate is being disrupted. The AI revolution is here. Many held on with strong conviction, insisting they would not sell this time no matter what. In May this year, Opendoor, a real estate online transaction company with a historical high of $39, saw its stock price drop to a historic low of $0.64. Unsurprisingly, it received a delisting warning from Nasdaq. They had to react quickly and push the stock price above $1 in the short term. From $0.64 to $1 requires a 56% increase. At the time, two major investment banks, Citigroup and Goldman Sachs, gave target prices of $0.80 and $0.90, respectively. Everyone thought the company was doomed, but no one expected that a comeback was quietly unfolding. In July, Canadian hedge fund manager Eric Jackson suddenly posted on social media. He mentioned that he had bought a large amount of Opendoor stock and believed it had the potential to rise 100x, with a target price of $82. This brought the near-delisted stock into the spotlight on r/WallStreetBets. That post was like a match thrown into the emotional fuel tank of the subreddit. Redditors went wild, discussing aggressively, "We must teach arrogant Wall Street investment banks a lesson. AI pricing models are unbeatable. Too many shorts. Time to squeeze them." Within days, call option trading volume surged by 2 million contracts. Retail investors piled in and injected a wave of capital into the stock. With nearly half of Opendoor's float sold short, this setup was perfect for a classic short squeeze. In July alone, Opendoor rose 245%, but that was just the beginning. On Wednesday, the story reached its climax. Opendoor announced a major leadership change. Kaz Nejatian, former chief operating officer at Shopify, is stepping in as the new CEO. A sudden executive transition is often seen as a sign of strategic overhaul. But what truly shocked the market was Kaz Nejatian's annual salary is just $1. Why? Because he is betting his entire career on this move, where his compensation is tied entirely to the company's stock performance. If the stock price stagnates or falls back below $1, he walks away with nothing, and he risks becoming a laughingstock on Wall Street. But if the stock climbs to $6.24, he will receive a significant reward in shares and options. If it soars to $33, the payout becomes massive. This is his message to the market. "I'm here to drive the stock price up," crypto investor Anthony Pompliano mentioned on X. If he gets the stock to $82 divided by share, he ends up with something like $6 billion personally. You willing to bet this guy can't figure out how to create value for shareholders and himself? Following the announcement, Opendoor stock surged 80% in a single day. Retail investors holding shares or call options saw huge gains. Opendoor's story is wild, but is there still time to get on board? Let's start with the fundamentals. The company has posted losses for 11 consecutive quarters. In Q2, it reported a net loss of $29 million. Q3 revenue guidance dropped sharply to $800 million, down from $1.5 billion in Q2. In short, the fundamentals are a mess, with no clear bright spots. From an AI narrative perspective, the new CEO has emphasized a vision of an AI-driven multi-product model, which could lead to some tech upgrades. But let's not forget, Opendoor is still just an online real estate platform. It is hard to imagine a long-term AI story that can sustain investor hype. If it is only about tech upgrades or operational efficiency, that is not enough to fuel lasting momentum. Looking at the history of meme stocks, they tend to experience extreme volatility. These musical chair-style rallies often end with a sharp drop over a few trading days, followed by silence. I have personally been caught up in the Reddit hype before, trading GameStop and Faraday Future. At one point, I was up over 100%, but greed got the better of me, and I ended up exiting with more than half my gains wiped out. That experience taught me how difficult it is to stay rational when caught in the frenzy. On the 12th of September, Opendoor dropped 14%. It is hard to say whether this is just a pullback or the start of a reversal, but it is definitely a warning sign. That is why I believe, in this crazy story, being an onlooker might be the smarter move. However, if you still want to try your luck after hearing all this, here are a few tips. Strictly limit your investment. Do not use margin. Ideally, do not invest more than 20% of your capital. Use intraday stop-loss tools effectively. Monitor the stock closely, minute by minute. Avoid holding overnight. This helps you avoid after-hours and pre-market risks. It is better to sell before the market closes and consider re-entering the next day. If you do not want to miss out on the US stock market opportunities this year, subscribe to our channel now. I will continue to track and analyze the hottest US stocks and uncover potential investment opportunities for you. See you in the next video.